system, the ICON's UNIPAS, is designed to transform the Ghanaian economy and position Ghana as the new manufacturing hub for the region. Government is committed to ensuring that adequate financial and human resources are mobilized to make Ghana the new commercial center for trade, finance, and investment on the continent, a duty we should fulfill as host country of the AFCFTA Secretariat. I expect all stakeholders in the export value chain, including the relevant ministries, trade and investment promotion agencies, regulatory institutions, and business development service providers, to work closely towards the common goal of ensuring.
Mr. President, it's against this background that we in Ghana have worked tirelessly to build a very solid foundation for the operationalization of AFTA in Ghana. And I'd like to draw attention to a few areas. One, we have conducted a series of sensitization and orientation programs for the private sector in Ghana, without whom this will not work. And this has not only been in Accra, we've toured the whole of Ghana and sent the message to the doorsteps of the average Ghanaian. We've also established a national coordination office which will provide the management support for the implementation of the program. We've developed a national action plan and program which provides detailed activities that will support our private sector. And we've also, under the direction of the President, installed an institutional support structure that would ensure the success of the program.
My guest is Anthony Owusu-Anan, and he is the CEO of Impact Capital Advisors, Fund Manager for Industrial Support Fund. That excites you, right? Me too. It does. It excites me a lot when I hear funds in the conversation. So Anthony Owusu-Anan is going to be our guest for this episode of Diplomatic Affairs. You're welcome to the show, sir.
Thank you very much.
It's good to see you. Happy New Year.
Same to you.
How has the New Year started for you?
Well, so far so good. We are looking forward to a much better year, given all the constraints we had for 2020 with COVID. So we are hoping that this year will be a much better year.
Well, thank you very much, and I hope it's a better year for all of us, because, I mean, globally we have been hit by COVID, and so we are looking forward to taking off on a very good note with 2021. Now, let's begin our conversation on this note. You saw the two bites that I played earlier to actually lead to in precedence of this conversation. We had the president, who has always been passionate about integration on the African continent, and for him, he shows so much zeal in doing all he can to ensure that this trade deal eventually takes off, and then it becomes it begins to reflect in the lives of Africans. And so he's very, very committed. And we have seen his commitments over the days that have come through, together with the weeks, the months that they were all on the grounds trying to push things through. What do you make of the African Continental Free Trade Agreement?
Thank you very much. I think the African Continental Free Trade Agreement presents great opportunities to the African people. Let me put it that way. This continent is made up of about 1.2 billion people. And the ability for people within the continent to move around and trade among themselves actually presents tremendous opportunities for wealth creation. To give you some statistics, if you look at interregional trade within regions in Africa, Africa actually has one of the lowest percentages in terms of trading within its own, within the regional ourselves. Right. Europe, for example, 67% of their trade is within themselves. And if you go to Asia, 61% is within the Asian region. If you go to the Americas, it's about 47%. But when you come to Africa, it's about 15%. So that tells you that we are not really doing that much in terms of trade ourselves. Now, the good news is that in as much as we don't trade too much among ourselves, there's actually an increase in intra-African trade. And so with AFTA coming on board, it is estimated that by 2022, trade within African countries can actually increase by about 52%. So all these shows that AFTA coming on board is going to allow us to trade with, allow companies within African countries to find new markets within the region, which are closer to home, new customers than they have traditionally been used to. Before, we always try to export almost everything we produce to Europe, and then we don't trade too much among ourselves. So AFTA is actually going to break some of those barriers that will allow African enterprises to trade within the African region.
Now, how feasible is this?
It is feasible. Like they say, a journey of 1,000 miles starts with the first foot.
Right.
So I think a lot has already gone on in terms of the protocols that needs to be put in place to ensure that people are actually able to move goods within Africa itself. Again, moving goods then means that people will have to be able to move within the region. And I think we've already started seeing signs of that with some countries in Africa now having visas on arrival that allows people to just get on a plane and travel to another country without having to go and get visas and stuff like that, which kind of, should I say, inhibits the ability of people to move around.
Freely.
Right. Now, when people move around, then the connections will be made, trade then begins to happen. But in order for trade to happen, something needs to be manufactured. And I think manufacturing in Africa is not where we hope it will be. In actual fact, manufacturing in Africa has been declining. From 2010 to 2015, manufacturing in Africa has actually been declining, which means that in order for us to be able to really take advantage of what the free trade area presents, we will have to boost or support our manufacturing base so that we can produce goods that can then be traded within the countries in the region.
I'm happy you made mention of the decline in manufacturing. Now, I think this is one of the many issues that a lot of people have actually shown concern about, and some are also of the view that, well, if we have outlined the various challenges, why don't we begin work from there before the implementation of the Trade Pact? In other words, could we have resolved to more manufacturing on the African continent to actually boost trading as you described it, instead of beginning with the pact and now having to come back to look at ways of manufacturing to meet the demand?
Well, in my opinion, I don't think we really need to wait until all the pieces come together before we embark on this journey. Just like a child, you give birth to a child, they learn how to walk, they crawl, then they walk, then they start running. So actually opening up the space and letting AFTA begin, we know there are issues, we know there are problems, but we'll go through the teething, process so that gradually those problems will be addressed so that we can meaningfully participate. So it is not really an issue of whether we are ready or not. It is an issue of whether we have the desire to improve gradually in a continuous process. And we have to take cognizance of the fact that the countries that are where they are, or the regions who are trading among themselves, also started from somewhere. And then gradually, you move on. If I could put personal examples into it, I remember when I was a young man, my mother bought a TV at some point, and it wasn't the best brand of TV you can think about. But she said, hey, that's what I could buy because that's what my money can afford. That brand of TV was coming from a country that I wouldn't want to mention the name, and was not considered top-notch TV. But today, that TV is one of the #1 TV brands in the world. And the brands that we considered as top-notch then had actually gone down. So if they hadn't started the journey, they wouldn't have improved gradually to get to where they are now. So I don't believe that we have to wait till all the pieces are in place before we embark on the journey. We just need to start, and then we grind the mill, we go through the teething problems, we solve them gradually, and then it will get us to where we want to go.
But what is AfCFTA without manufacturing on the African continent?
Good question. There is some manufacturing. So that's the whole point. The whole point is that to trade, you need to manufacture. So there is some level of manufacturing on the continent. It's just that it is not happening the way we expect it to happen. And also because our manufacturing base in terms of competencies and technical expertise is not as strong as we wish it to be. And then secondly, to make anything happen, like they say in the local language, if you want good things to happen, it takes money. So to make it happen, there has to be ways of making sure that flexible, appropriate, and long-term financing is made available for promoters and entrepreneurs who embark on the manufacturing journey. So we know we are not there, but we have to start, and we have to start looking at the constraints, unlock the constraints, and gradually grow our manufacturing base to where we want it to get to.
Now, talking of flexible and easy access to money for small, medium enterprises, I would first off want you to tell me about small, medium enterprises when we, under that category, what it means when we talk about small and medium enterprises, SMEs.
Okay. Thank you very much. Well, typically, the private sector in general is categorized based on, there are a lot of, should I say, delimiters that we use to categorize the private sector. But the two key ones that are often used is the number of employees that a company employs and the capital employed in doing whatever business that they are into. So typically when a business employs less than 100 people, we say that that business is an SME. And when, so let's say between 10 to 100 people, we will say that that business is an SME. And when that capital that it employs, it's also typically below $5 million, it is considered an SME. Now, when the business starts employing over 100 people, then we say that it's a corporate body or it's a large-scale business. And then obviously we have our micro, small, mom and pop businesses who are employing 1, 2, 3 people and probably trading with $5,000, $10,000 equivalent in local currency. So we typically use the number of employees you have and the capital that you are employing in trading to determine whether you're an SME or you're a large corporation or you're a micro business.
How crucial or how significant are SMEs in the building of a nation's economy?
Very, 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 very significant. In almost all economies in Africa and even in Europe, SMEs are known to be the backbone of every economy. So they actually may not generate the highest number of employees per business, but collectively put together, SMEs are one of the biggest employers in almost every economy. And then you have to understand that most businesses don't start off from day one being large businesses, right? They start off small and then they grow to become large companies. So if you don't generate a lot of SMEs, then basically you are losing the opportunity to start having big multi-billion-dollar companies, which can then give you the, what do I call it, the word to use, the big bang that you want. So let's take somebody like Dangote, now investing billions of dollars all over the African country. At one point started as an SME. So it is actually imperative for everybody interested in the economic development of any country to grant as much support as they can to entrepreneurs and promoters to start a lot of small businesses, which some may grow to be bigger companies. And even if they don't grow to be bigger companies and they are sustainable, they continue to create employment and generate wealth for the well-being of the people.
You mentioned that SMEs, to a larger extent, employs a chunk of the population in every economy, every country's economy. Have we done better with SMEs in Ghana?
Well, it will be difficult for me to say whether we have done better or not, but what I believe is that we do recognize that they are the backbone of the economy. We do? We do. Almost every, should I say, every policy document that you look at, there's the National SME Policy, there's the National Entrepreneurship Policy, and then if you look in even our trade policies, it is always very clear.
So the recognition is there.
The recognition is there.
That is in the blueprints that we have.
Yeah.
How about happenings on the ground, in reality?
In reality, efforts are being made, but more could be made. Let me put it that way, because SMEs have a lot of challenges. If you think of SMEs, to put it in perspective, if I should take a big business like, let's say, a Unilever, for example. If a Unilever wanted to embark on anything, it may have the financial muscles to hire an accountant, hire a marketing team, put a production team together, get its supply chain ironed out with a lot of professionals, and has the wherewithal to do it. But SME may not necessarily have all that financial resources to put together a team to execute its mission or vision. At the same time, in addition to not having the financial resources, the person who's running the business may not necessarily have all the technical expertise and competencies to be able to do it itself. So you get caught in a conundrum. If you don't have the finances to plug and play the expertise that you need, and you yourself as a promoter don't have all the expertise, then the question then becomes, how do you grow your business or move from one stage to the other? And that is why there is the need for more to be done in terms of making sure that appropriate finance, and I use the word appropriate because not every kind of finance is appropriate for a business depending on the stage in which the business is, and also the provision of technical assistance, which could be in the form of soft grants to help these SMEs to build their capacity so that they can basically get out of the trenches and run.
Interesting. So you're still watching Diplomatic Affairs with me, Harriet Nate, and our guest is doing an excellent job, trying to break things down for us to understand. And we are talking about building African industries for the African Continental Free Trade Agreement that we have up and running. My point to you is, Mr. Annan, why is it that it's often difficult for businesses, baby businesses, I call them, baby businesses that are new? If I want to start a business and I need capital or financial support, it's often difficult. Like you said, on paper, it looks beautiful. There's a policy, it is recognized, and it spells out all that must be done to help these businesses to spring up or to eventually gain momentum. At a point, it becomes difficult for one to have access to, you call it appropriate finance. And I would want you to touch on that when you say appropriate financing for businesses, startup. I call it startup businesses, right? Why is it so difficult? Because most people have brilliant ideas, lack of expertise, lack of the technical support you made mention of. It actually inhibits them to take off eventually from the ground.
Let me say that for businesses that are matured or know what they are doing or stable, it is actually not difficult to get finance. As somebody will say, if you go there, how many banks do we have in Ghana? About 20.
So we only support businesses that are matured.
We only support businesses that, I'm not saying we only support business. Okay. What I'm saying that for businesses
that are matured
and doing well, it is not that difficult to obtain finance.
Okay.
Because all the banks in Ghana, 26 of them, are all there to support businesses. So when you go to the bank and then you say you want financing for your business and you're not getting the money, the question you ask yourself is that why is that? the banks are in the business of selling money. That's what banks do. They sell money. So if they're not selling you that money, then it means that you are not a good fit for the risk profile that they are looking for. So there is something we call the business life cycle, the life cycle of a business. A business starts as an idea, then you go to a startup, then you have your early stages, then you start growing, then you become a stable growing business. Banks are typically interested in financing businesses that are in the stable stage and growing. Reason being, at that stage, their future is to a larger degree predictable. But when you are in the early stages and you have just begun, nobody really knows exactly where you are going to end up. And so for that matter, most financial institutions don't want to risk their financing in financing you. And it is at this stage where the need for financing is actually very constrained. And that is why we talk about having appropriate financing for businesses in that stage. So if I take what my company does, for example, we do what we will typically call private equity or venture capital financing. And what we do is that we look for young people who have brilliant ideas, who needs financial support and technical assistance to be able to get their businesses off the ground. And for us, that is the level of risk that we are willing to take and participate in terms of helping build these industries. Once we build them to for let's say 4 or 5 years and they are stable, we are more than happy to hand them over to the commercial banks for them to continue their journey. So to put it in perspective, there isn't that many of our type of funding available, not only in Ghana but across the African continent. And it is for that reason that what I would probably like to see is that there should be a concerted effort to ensure that there are a number of funds managers like myself get supported and that pool of financiers grown in order to support industry. So for example, my fund, the likes of my fund, I can count the number that we have in Ghana. We are not more than 5. So look at how big this Ghanaian economy is. Yeah. So if there's only 5 of my kind of, should I say, firms supporting businesses, then obviously there's going to be constraints in terms of who we can support and who we cannot support. So I would like to see the point where the government or the development partners and the development finance institutions make a concerted effort to increase the number of available fund managers who are looking at what we call early stage enterprises and providing them with the needed capital and the financial support for them to get off the ground. I would be very, very happy to have 30 competitors in my space, because then what it means is that together the market is too big for all of us, for anybody to complain. And we believe that that type of funding is actually what is most appropriate in getting all these young people and people with brilliant ideas in getting their manufacturing businesses or any other business that they want off the ground.
All right, interesting. I'm really enjoying this conversation. We haven't even started yet, so this is just the prelims, like they say. So we will be coming to the real conversations. We want to be practical whenever it comes to some of these issues, because we know the people that are usually in the space of SMEs, it's difficult for them to really understand all the technicalities involved as to why I need financial assistance and I cannot get any financial institution coming to my aid or helping me. So they don't understand. But at least I'm glad you mentioned your institution, what you do, which is the Industrial Support Fund. We will take a break. When we come back from the break, we will focus on the Industrial Support Fund, what it does, and how you can qualify to help or have assistance when it comes to having your business running.